much bigger risk to the U.S. is a capital war rather than a trade war. And the way that regimes that are antagonistic to the United States might execute that is by selling their reserve holdings in U.S. treasuries. We actually saw some indications of a bit of a test of that just after the election, where we saw a relatively rapid set of about $100 billion of sales of U.S. treasuries over the course of a couple of weeks. I think when it comes to markets, the risk of that is that you start to get some upward pressure on treasury bonds, which will flow through straight to the equity market as an effective financial tightening, because that selling of assets means that somebody's going to have to buy it, and they're most likely going to move money out of equities and into bonds in order to do it. So the big threat there is that the capital war exacerbates the trade war, and that creates a real pressure on the U.S. economy, both directly from rising bond yields and its effect on the economy, as well as how it'll flow through to risky asset prices like stocks.
Bob, listen, just real quickly, need to go for a break, but I want to push back on that. I mean, a lot of people say that's sort of always been a red herring, right? When you take a look at the top 1 and 2 holders, foreign holders of U.S. Treasuries, which are Japan and China, right? I mean, neither of them are going to end up actually selling their Treasury holdings, are they? Because then they're shooting themselves in the foot, right? They're hurting the value of their own portfolios. What we have been seeing, though, over the last couple of years has been a trend, and that is a bit of a fade. They've been easing back on their buying. In China's case, as you probably well know, a lot of that money, what they do with their trade surplus, it's a massive one. We're at $1 trillion, right? They've been recycling that and buying less treasuries and more gold. I mean, this is all part of the whole de-dollarization story as well, isn't it? I'm curious, where does this end up, one? And two, where does this leave Japan as well?
Yeah, well, from the Chinese perspective and the perspective of a lot of reserve holders that are antagonists, that have regimes that are antagonistic to the United States, the lessons from the dynamics with Russian reserves post-Ukraine invasion certainly have started to give hesitance to continuing to hold U.S. treasuries given what might happen in an environment of rising conflict. And that has, of course, driven a lot of demand for gold. Look, even a couple percent reallocation out of the treasury bond market to gold by global reserve holders will create a significant upward pressure on gold. And that's essentially what we've been seeing pretty consistently for the last couple of years. And so I think in many ways, while the dumping of U.S. treasuries may be limited, it doesn't take much to really create that strong bid on gold that we've been seeing.